The U.S. liquefied natural gas (LNG) industry is experiencing a record-breaking year, with 6 projects securing final investment decisions (FIDs) and a staggering $72 billion in financing so far. This surge in activity is fueled by Europe's eagerness to reduce its reliance on Russian gas and Asia's growing demand for American energy. But here's where it gets controversial. Despite the increased liquefaction fees, U.S. LNG developers are thriving, with buyers willing to pay more to secure American LNG. This is particularly true in Europe, where it's seen as a means to cut off Russian supply by 2027, and in Asia, where it's a lever to pull in tariff and trade deal talks with the Trump administration. The U.S. LNG industry is now on track to have signed the second highest export volumes on record, trailing only 2022. Encouraged by the Trump administration's energy policy, LNG developers are taking advantage of the market and regulatory tailwinds to approve investments in new projects. So far this year, Australia's Woodside has announced the FID for the Louisiana LNG project and plans to start production in 2029. Venture Global took FID and successfully closed the $15.1 billion project financing for the first phase of the company's third project, CP2 LNG, together with the associated CP Express pipeline. Top U.S. exporter Cheniere has made a positive FID for the Corpus Christi mid-scale trains 8 and 9 and debottlenecking project. NextDecade has decided to invest $6.7 billion in the expansion of its Rio Grande LNG facility in Texas, in the second Rio Grande expansion announced this year, while Sempra approved a $14 billion Port Arthur LNG Phase 2 expansion. U.S. developers of 6 export projects have made FIDs and secured financing so far this year, bringing total global LNG finance to a record of $72 billion, energy commodity shipping broker and advisor Poten & Partners said last month. 6 U.S. FIDs in 1 year is unprecedented. The highest number before this year was 3 U.S. projects. The liquefaction finance tally could continue to climb in the final quarter of this year as a few more projects, also in the U.S., appear to be nearing FID, Poten & Partners said. In the near term, the U.S. is set to add 5 billion cubic feet per day, BCF/d, in LNG export capacity in 2025 and 2026 alone, as Plaquemines LNG and Corpus Christi LNG Stage 3 projects come online, the Energy Information Administration said in its short-term energy outlook in October. Additions to LNG export capacity are set to boost total U.S. LNG exports to 14.7 billion cubic feet per day in 2025 and to 16.3 billion cubic feet per day in 2026, up from 11.9 billion cubic feet per day in 2024, according to the EIA estimates. However, the surge in U.S. LNG exports and the expected jump in Qatari LNG shipments once Qatar's mega expansion projects are completed in 2027 have stoked fears of a coming LNG glut that could depress prices. U.S. developers appear unfazed by this prospect and are even raising their liquefaction fees as project costs soar amid persistent higher financing rates, labor shortages, and an increase in prices of materials. In March this year, most U.S. liquefaction fees were being discussed at $2.65 per million British thermal unit, MMBTU, to $2.95 per MMBTU, as EPC cost escalations show no sign of abating, Poten & Partners said at the time. Now U.S. LNG exporters and developers are asking about 15% higher liquefaction fees compared to the 2023 average of about $2 per MMBTU, Poten & Partners business intelligence head Jason Fear told Reuters this week. And they are so far getting these higher fees in new contracts. Buyers are still willing to pay higher liquefaction fees to secure American LNG, which is seen in Europe as a means to cut off Russian supply by 2027 and in Asia as a lever to pull in tariff and trade deal talks with the Trump administration.